Good morning and welcome to Market Day Report. I'm Chris Swift. I am anxious to see how the market's going to trade today. They didn't really do a great deal overnight. Corn market was a little bit softer and the bean market just a little bit firmer. But let's see how we're going to start out here at the 8:30 bell when it rings. And down 1.5 on the July corn at 446 3/4, down 1.5. The September contract down 1.5 at 453 3/4. At December contract 466 1/4, down 1.5. So we had been hugging around that 470 level. We've lost it now and still kind of trading a little bit lower. Hope we don't move through that 460 level there. See what the soybeans were doing. They're a little bit softer now. I got the July contract down 8 at 1201 3/4. The August contract down 8.5 at 1197 3/4. New crop November beans 1178 3/4, down 8 1/4. If you recall, yesterday the high of the day was 1199 3/4 in that November bean, so it got right up there to it. Let's see what the wheat market looks like this morning. July wheat up 2 1/4 at 549 1/2. The September contract up 1 1/4 at 563 3/4, and out to the December up 3 1/4 at 586 1/4. Kansas City hard red winter wheat down a penny on the July at 567 even. The September contract down 1/4 at 576 3/4. Out to the December up 1/2 at 594 even. And we'll wrap it up with Minneapolis spring wheat up 2 3/4 on the July, 663 1/4. The SEP up 3 at 668 3/4, and Deese up 2 at 682 even. I got Brian Hoops on the phone. He's my guest this morning. Brian, good morning to you. And is there anything on this Friday morning that just really stands out to you?
Hey, good morning, Chris. Sounds like you're in a good mood this morning. We seen a little bit of weakness in the soybeans, the corn overnight. Wheat's trying to trade higher, just kind of the opposite of what we saw yesterday morning. That's how these markets are trading, is just very choppy. One day up, one day down. 24 hours ago, soybeans were sharply higher, and by the end of the day, closed 24 cents or more off of their session highs. Well, we did have a private export sale this morning. This time it was corn, 125,000 to an unknown destination. Now, typically, we sell corn to Mexico. That's our biggest buyer of corn this year. And when we hear this unknown destination, it's not going to end up being Mexico. The rumor is it's going to end up being China, and that's probably going to be very supportive to our corn trade today. We closed right on some technical support. I would suspect we'll bounce this morning off of this news and the fact that it may be China, maybe more coming down the pike rather than just a routine sale to Mexico or another country. NOPA crush report coming out later this morning, 11 o'clock. Trade's looking for a new record for the month of crush and oil stocks to be near 9-year lows once again. So probably going to see some meal oil spread trade going into it, and then a reverse kind of the buy the rumor, sell the fact type of trade afterwards. Weather-wise, there's not a lot of concerns. It's a little bit dry in the very northern top tier of Brazil, and that's about it. They're getting plenty of rain through most of the country this week. Argentina looks to be good, and without any major weather threats, either in Argentina, Brazil, or here in the U.S., it's going to be a very choppy market, I'm afraid. We saw a lot of short covering in corn and soybeans in the last 2 weeks. That may start to slow down here without any type of a weather issue.
Yeah, and Brian, it's kind of interesting. I look at that corn market as maybe something that has a little bit of more interest to it than maybe the beans, simply because there's a couple of factors going on in corn. We're going to plant a few million acres less of corn this year instead, and we're going to replant those in beans. It'll be interesting to see on the 28th will we get to that. But as you stated, there's a little bit of dryness in the northern part of Brazil. And I keep looking out going, you know what, within probably less than a year, we're going to chew through some of these corn stalks, and then next year's crop might have some questions to it. I'm kind of wondering if shouldn't be looking a little bit longer term out into the markets and go, while these prices are really low today, maybe that gives us some opportunity 12, 18 months out down the road.
Yeah, there's always seems to be some opportunities. The question is, can you spot those opportunities? Can you be fortuitous enough to take advantage of those opportunities? You mentioned that we may plant some less corn acres. I think general consensus is to see 1 to 2 million less corn acres planted this year and about that many more soybeans. That's kind of what the USDA hinted at their Ag Outlook Forum. A lot of privates are talking about the same thing. I don't know if we're going to see that many less corn acres. That's going to be a question. I think the farmer likes to plant corn, wants to plant corn. There's a little bit more variability in their yields. And so if they can have good corn yields this year, they could have some profitable opportunities.
Absolutely. Brian, stick with me. We're going to go away and take a real quick commercial break. We're going to talk cattle when we get back. I'm Chris Swift. Stay with us. Welcome back to Market Day Report. I'm Chris Swift. Boy, there were nothing shy of volatility yesterday in the livestock markets, and it looks like this is the way we closed yesterday. So we're going to open up this morning after a soft closing yesterday of April at 186.95, down 297. The June fats down 267 at 183.37, out to the December down 185 at 189.25. The feeder market had taken some pretty hefty losses, down 280 on the March contract. The feeder cattle index closed yesterday at 248.46. So finally got a positive basis now against the March contract, where the cash market is trading slightly higher than what the futures are. April, though, 251.17, down 467. May down 377 at 254.82, and most of the back end lost that 270 handle, now trading 267.77 on the SEP, down 380. We'll wrap it up with hogs here this morning. Hogs were mixed yesterday, with the April contract up 15 at 85.02. The June down 30, 101.42. July down 22, 103.50. I'm going to invite my guest, Brian Hoops, back in again. Brian, I know that was a big break in the market, and I just happened to notice that that was a new low close in the May contract of feeder cattle from that February 27th high.
Yeah, you're right. It was not only a new low close, it's a bearish technical close. We had noted to our clients that cattle had kind of bounced off of a support area, but if we go through that area, close below it, you're really establishing a downtrend in these cattle. It's in the feeder cattle, I should say. We have a series of lower highs, lower lows being established. You took out a lot of support, and with the higher corn prices, you really probably need to be looking at doing some sort of hedging strategy here in those feeders, at least in the short term. You know, we've seen a lot of volatility, as you mentioned. On Wednesday, we probably rallied much higher than what fundamentally was justified. Thursday, we probably dropped farther than was fundamentally justified in the live cattle, almost 300 points in April. We're starting to hear, a little bit of trade breaking loose in the north and not much in the south. But I think once it does develop, you're looking at probably a 186 trade. Well, April futures are not holding enough premium over that 186. They probably need to add some more premium in today's trade. But problems still persist in this cattle market from the standpoint lack of demand and the fact that steer weight's up again this last week, another 5 pounds heavier. So even though we're not killing as many animals this year compared to last year, we have a lot more tonnage hitting the markets. We're 20 pounds heavier in carcass weights this year compared to a year ago, and that's longer term going to be a bearish factor for this cattle market. So really, you probably need to be straight hedged in feeder cattle futures and some put call spreads at a very least in the live cattle market.
Well, absolutely, and we know that the market being lower like that, it starts to really wear on the margins, and we know that everybody's really thin on margins right now as it is, so any kind of price differential there is going to be pretty huge. Brian, certainly do appreciate you taking the time to be with us this morning. Hey, it's Brian Hoops. He is with Midwest Marketing Solutions.
Great stuff.
Suzanne,
we're off and running.
Yeah,
Not just yet.
Let's
anticipation for these markets as they open. I know.
We're 5 minutes here. We're at the opening bell.
Looking forward to it. Thank you, Chris.
Absolutely.